DAO governance is messy. And it's
Yeah.
tons of people. I like this joke. DAO stands for dudes arguing online. sometimes, sometimes that's just what it is.
What's up, everyone? Welcome to Proof of Talk. I'm your host, Andre, and I'm here with former core Ethereum developer, Christoph. Christoph, lovely to have you here, man.
Thanks for the invitation. Great to be here.
I was actually just reading before the podcast about the Ripple hack. I'm not sure if you've read about
Yes,
it.
I just
Um,
barely read like a tweet, so no in-depth knowledge about the hack exactly. Only a tweet.
so it turns out that Ripple itself wasn't hacked. It was just the one of the co-founders' wallets. Well, several of the co-founders' wallets that were accessed with an unauthorized access, but nothing on the Ripple itself. So that was nice to see.
Yeah, but still, they should try their best to secure their keys. But it can happen to everyone.
100%, yeah. And I feel like this kind of stuff always have been plaguing the crypto space since the very beginning. There's just because it's a technology that continues to evolve. There's always going to be a vector of attack that you haven't thought about, even if it's something as simple as social engineering or anything else that might be.
Right.
Um, but in any case, I really wanted to talk to you a little bit about your experience as an Ethereum developer. I feel there's a lot of stuff there, and I just wanted to get a bit of an understanding of what it was like back in the old wild days. What was it like to be an Ethereum dev?
Sure, surely very different than today. Maybe let's start. Like I got into Bitcoin in 2013. This was
Yeah.
just accidentally. I was doing my PhD in theoretical physics and I wanted to do some computer simulations and was searching for cheap GPUs. And I was stumbling upon those GPU miners. And back then they were selling their GPUs for FPGAs and later on ASICs. So that's how I
Yeah.
got into Bitcoin. And at the time, I could read everything which existed. Like there was not much. The Bitcoin white paper, and it's important because Ethereum was started by Bitcoiners. So all of those people were Bitcoin people. They loved Bitcoin. They loved freedom. They loved this idea of decentralization, censorship-resistant, permissionless ecosystem. That was the core of Ethereum. And so when Vitalik wrote the white paper, which I highly recommend it for everyone to read because almost everything in there, it's like a prophecy is fulfilled today. Like he spoke about tokens, he spoke about domain name systems like ENS today. He spoke about DAOs. The only thing I think he missed were NFTs. So that's the only thing you cannot
Right.
find in there. But everything else basically happened. So, and the core idea, and that's important now from the story, it was not about creating another Bitcoin just with better features. It was not about creating another virtual currency. For all of us, it was totally clear Bitcoin is the digital currency, the one and only. And this was how it was at the time. And now we just have this tech, blockchain tech, which hasn't been used that much for other things than the currency itself. And what else can we do with it? And so with Vitalik's idea about this Ethereum virtual machine, or basically a way of putting code, little code pieces into the blockchain or on the blockchain, this made it possible to create decentralized applications. And Ethereum was only and all about decentralized applications. So Ethereum was a tech stack for building those decentralized applications. And in the beginning, it was not just Ethereum, it was also something called Swarm and Whisper for
Mhm.
decentralized messaging and decentralized file storage. And the vision was, let's build a complete tech stack so you can build an application which 100% runs on this new tech stack. That's why we called it the new internet, or someone later on called it Web3. I think Gavin Wood was the first who termed
Yeah.
Web3 together with blockchain in this context. And this was the idea, building a platform for decentralized application, not more, not less. So we started building. I joined in summer 2014. So I was one of the first developers who were hired right after the crowd sale. So the crowd sale happened in summer 2014. I just
Yeah.
came in right after that. And I was joining the team of Gavin Wood. He worked in the Berlin office and they built the C++ client. And so how you can, like how it was back then, Vitalik had this white paper. But based on the white paper, you cannot write an Ethereum client. This is like more a vague idea of like what could be possible. And I think it is Gavin Wood is underrepresented or underappreciated in the Ethereum community for what he has done. Because the masterwork of him was to write the yellow paper, which is the technical specification of Ethereum. Bitcoin doesn't have such a thing. There you only have the reference implementation, the C++ client. But here we have a written down, back at the time it was like 15 to 20 pages, very technical, very mathematical description of how Ethereum works, from consensus mechanism to Ethereum virtual machine to all the details. And based on this paper, he wrote the C++ client. Then Jeffrey Wilke wrote the Go client, today known as Geth. And Vitalik wrote PyEthereum, the Python version. And in the community, there was a Java version, I think one more written in Haskell. So basically, different developers just took this specification, I can build this, and started building. My job
Right.
was to be the Ethereum lead tester. So I did write thousands of tests, where you could prove that your client is behaving according to the specification. So, and in the beginning, they didn't, and even the specification was not complete. So we basically had lots of issues, like things like the division by zero is different in Python than in C++, and so different results, and you need to properly define it, and then this definition needs to be applied in those clients. So I would basically tell Gavin, you mistake there, Vitalik, mistake there. I was just pointing out all the mistakes, either in the specification or in the clients. It was a lot of fun. So I was very independent. I didn't have a team under myself. Later on, I hired one developer, but I loved my job. I was working as a freelancer, being every other week in Berlin in the office. And Berlin was really the headquarter of Ethereum, kind of. This was where most of the people were who
Right.
coded. And you still had Vitalik traveling around. We had some people sitting in London, some the guest team, some of them sitting in Amsterdam. So, but I could still say Ethereum was built in Europe, if you want, like at least the core of it. So this was like a really fun time. Vitalik was leading by example, like I say sometimes. He just wrote the Python client, he was answering questions and the overall vision, but the technical lead really was Gavin. Gavin was the
Right.
one who wrote the specification, the first working client, and my tests were also based on the C++ client. So this was 1 year, and I think there was one, we solved minor issues. When Christoph is not finding any bug for, I think, 3 or 4 weeks, then we can launch. So the launch was always delayed because there were always new bugs, new problems. Then we had a testnet working okay. And until the testnet was stable, then we could say, now we can launch. And the launch itself was also, nobody did dare to like push a button. Nobody had the authority to launch Ethereum. So we all were deeply influenced by this Bitcoin mindset of pure decentralization and no single point of authority and so on. So this was shown also in the development, meaning there was, even though Gavin maybe was technically the strongest, it was still a community project, lots of open source contributions, and there was no clear leader. Even though Vitalik
Right.
maybe from a mind like visionary and Gavin from a technical perspective. But in the end, what happened, now comes a bit of history details, which are still shown today. Like there were minor things which happened, which influenced the present a lot. So one thing was, initially the thought was, all the three main clients, which was the Python client, Gas client, and C++ client, were to be audited and then released at once. Ethereum is starting. You can choose one of those three clients and get going. So, but then, for time reasons, the security audit company could only do one client at a time. So they started with Geth. Geth was ready, and C++ was not ready yet, even though at the time C++ was more stable, more performant. I would say C++ at the time was the best client.
So how
But
come
Geth,
they choose Go first then?
yes, that's the story now. So Geth was audited, and so then everybody thought we need to launch Ethereum now. They're waiting for so long now, and the crowd sale was over a year ago. So let's just launch with Geth. And let's say the other ones, you can still use them, they're just not audited. So on
Right.
they say, okay, no big issue. So then Ethereum was launched by having a blog post which describe how you create the first Ethereum block. And as an input parameter, you needed a hash of a certain block in the testnet. So this was basically when this block came in the testnet, you use this hash, put it in a script, and then you start Ethereum. So actually there were hundreds of people who started Ethereum at the same time. After about 1 hour or so, they found each other in the peer-to-peer network, and then the longest chain, of course, was the wallet one, and they continued to building on top of this. This is just how the launch happened. But the issue was a bit about communication. The communication was you can use any client, but the only one which is audited was the gas one. So it was like the official one. So everybody thought Gas is the official Ethereum Foundation client. You should use this one. And I remember Gavin was not happy about this. And then he had like 90% Gas and 10% Pi Ethereum and the C++ client. It kind of never changed. It is basically this
Yeah.
little thing just continued to be like this. And then the C++ client got audited, but and a big release was made. Now you can use C++, but nobody cared to switch. So they had their Gas client running. So why switching? So and this is why C++ is always minority client. And then comes the next thing. Ethereum Foundation was about to go bankrupt. This was a non-profit. They didn't make any income, so they only had the money from the crowd sale and what they gave themselves in ETH. You can still find it in the history of the blockchain how much the ETH Dev wallet has in ETH. And the saying was we have about, I don't know, 3 or 4 months left. This was fall of 2015, and then we are bankruptcy. Like you should all look for a new job, and we have to look for something new. And Ming came as the executive director, and she decided to cut off everything which was not absolutely needed. And among this was the C++ team completely. Because if you have one client, why should you have three? One is enough. So basically,
Right.
Python, Geth, marketing team, this was Stefan Toal at the time, everything was like fired, and only the core was remaining. After that was DEFCON 1, and then the Ethereum price went up like 10x, and then the foundation had money again. So
Right.
this was, and then they could have hired them back, but then Gavin started like East Core, which later developed into Polkadot and Parity, the first Parity Polkadot, and so they all went their own way. I was doing Slockit. I was also leaving because the C++ team was basically canceled completely. So this is why we today have basically a total gas like maturity when it comes to client diversity. This was the early days. It was exciting, fun, one of the most fun part of my work history, I would say. Lots of fun details, but exciting time. Yeah. And most of those people, pure visionaries. And you would say they didn't join for the money. That some people think Ethereum was just a money grab. Absolutely not. The price of Ethereum was still so low that even those who got Ether as a payment, they get paid something like 50 to 100K a year, which is a normal salary for a developer or for someone working in a company. So reasonable salaries, but paid in ETH. ETH wasn't worth much back then. Even after the launch in 2015, ETH was like 50 to 80 cents. So it was still all very, very low. And people who joined didn't join for the money, and it was not built
Right.
as a ultrasound money. This whole narrative about Ether being money and ultrasound money and like EIP 1559, all those things which happened later, um, they made ETH like money, but it wasn't in the beginning. The beginning was just we described it as oil to like run those applications, but the whole point was running applications, not being money.
Right, that makes a lot of sense. And also, I'm guessing people at the time, when you're mentioning ETH was like 50, 80 pence, they were being paid in ETH, but there was not a lot of use case for ETH as money. So probably people still had to sell a good part of their monthly or yearly payment. So it's not like they were sitting on this ETH and then eating, like, because you can't just eat ETH, right?
Right. Those were not like rich people. So maybe some of them, maybe Joseph Lubin. Joseph Lubin, he paid for most of it. So he was like the rich guy there. But nevertheless, I remember when like ETH went up from 50 cents to €2. Everybody was selling. Like this was like
Yeah.
crazy. This was a 4x. So that's why the ETH distribution is still pretty good. Like ETH was sold in the beginning. Every time it made a 5x or 10x, people were selling like crazy. So meaning ETH is fairly distributed. You still have some backholders, you still have someone who hold long term, and but you should not think about like all the ETHers becoming millionaires because of they worked for the ETH Foundation back at the time. Maybe some, sure, but not all of them.
Oh yeah, 100%. Just like think about the Bitcoin pizza guy, right? Like he
Yeah.
spent 10,000 Bitcoin buying two pizzas being delivered to his apartment. And sometimes it's like you said, it's more than money. Sometimes it's about the idea itself. I think if you're so early into Bitcoin and you spend 10,000 Bitcoin to buy yourself two pizzas, you're fully aware that you might end up, just banging your head on the table 10 years down the line, but you're willing to do it anyway to help with the adoption. So it's always a bigger idea at play. And I think that's what's fascinating about the way Ethereum itself came to be, where it is today, which is like the world's largest supercomputer in a sense, right? And I think going back to your point about gas and oil as the what you're actually paying for when it comes to transactions, that's effectively you're paying for the compute. It's pay as you go for the
Right.
compute, for the privilege of using this machine in a fair and transparent way, you know.
And yes, and Ether was the currency to be used to pay for this compute to the miners back then. So this was the
Right.
idea, and this is exactly how it was executed. And yes, the money narrative came much later.
Right, exactly. And when it started, because maybe people are new into the space, it never supposed to be proof of stake. It was always proof of work, right?
Well, it was the plan was always to have proof of stake at some point, even in the
Okay.
very beginning. Um, naively, we said it will take us 6 to 12 months to implement it, and then we switched to proof of stake. That's why there was this thing in there where they always had this freeze. I forgot the name, where like the ETH issuance would go up over time exponentially, so that people would have to switch to have to fork out this ETH bomb, if you want to call it.
Yeah.
So this is how we wanted to force them to move to proof of stake, because they would have to hard fork away from the current chain, because there was like a expiration date set for the chain. So, but it was always postponed. There were hard forks done to just postpone this date until we actually had proof of stake. Proof of stake is of course way better than proof of work.
Was there a reason for kicking it off with proof of work if you were planning to move to proof of stake at
It
some
was just
point
not.
anyway?
There were always vulnerabilities found and ideas like how you could attack it, not secure enough. I think we could have done it earlier, but I think the price of ETH increased, and so the network price was higher, and so we became more like cautious. So like, yeah, otherwise you could say just bring it in. If there's a little bug, you can fix it later. So it doesn't need to be perfect. But now with billions at stake, it needs to be perfect. So they started
Right.
research groups, and they wanted to make 100% sure it is super super safe. And so, and every time like the research was going on, price was going 10x. They became even more cautious, and so it got delayed and delayed. Plus, some more research was done, more answers were given, more opinions, until we had like the final spec for proof of stake. Yeah, it took way longer than anticipated. Would have been great if we would have done it way earlier, but it's just how it is.
Yeah, yeah. And I remember when there was the transition to move to proof of stake, that the whole process was we're going to try it on this test net for a couple of weeks, move to this other test net, and then move to like the third test net, final test net, and eventually go on the main net. Was
Even
this?
there, they did
Yeah,
that directly to mainnet. They started the beacon chain, which was the
right.
actually proof of stake chain, but without connecting it to the execution layer, letting like the proof of work continue to run, see how it goes for 1 or 2 years, and then basically make the real switch. So super cautious, but I can understand why.
Yeah, how's that for a CI/CD pipeline right there?
Yeah.
That's crazy. Was that kind of the start of the process? Like you guys testing things early on? Did you always have this approach of testing across multiple test nets and then eventually
Right.
making a move to the main net?
This is
That was
always, yeah.
okay. And was it different to kind of test with does it make a difference if it's in the early days and you got a smaller test net with less nodes? Is there like
Sure, you can test for different things, but also I was voting mostly like unit test, integration test, the things on the client level, and those tests were very simple. The JSON file was pre-state, transaction, post-state, and all those clients would run them and see if they have the same result for the same transaction. So later on, we had those test nets, and then also some other test frameworks we were using. But then I was leaving. I was leaving end of 2015 to start Slockit, and then later the DAO. So I was not responsible for that part anymore. But today they have a
right?
more advanced testing infrastructure than we had back in our days.
Right, yeah, I bet. How many people are with Ethereum right now, like working on Ethereum? It's probably
I think
thousands.
50 to 70, something that range, but I'm not 100% sure. Since I'm not working at a foundation anymore, I don't know. It's just the last number I heard when I asked someone, something in this range.
Right. Do you still follow along with the development? Do you kind of follow the project and
Yes, maybe not as closely as I should. So I'm following along, like looking at the EIPs, looking at the main developments, but I'm not part of the development group directly. I'm not
right?
contributing code anymore. Would love to,
Yeah.
missing some time.
Do you ever vote on EIPs?
Not anymore. Like since I'm not too involved. I think if I really want to, if I code and if I contribute, and if I look at all the details, I can have a very strong opinion on things. Otherwise, yeah, sometimes I do give a vote if it's more like economic features and things which are more high level. But if it
Right.
goes down to the code, I think the ones who are building it or using it should be the ones voting for or against it.
And that makes sense. That totally makes sense. Look, I gotta ask you, why Solidity as the end language for people to write the smart contracts in?
So Solidity was the idea came from Gavin Wood, and he asked Christian Reitweisner to build it. So Christian Reitweisner was the one doing it, and it was more C++. All those object-oriented languages like Java or C++ had a similar style, and in this style, he basically said, "Well, we need something owned for the smart contracts." Like in the very beginning, I was actually writing in bytecode. So if you go down to this like a smart contract, it's just bytes. So that's the Ethereum virtual machine describes how those bytes are executed. So then, since we needed some other language to write them in, all of those different clients had their own language. We had, I think it's called Serpent from Vitalik himself in the Python client. The Go client had a language called Mutan from
Okay.
Czechoslovakia. Almost nobody used it. And then C++ had LLL, low-level Lisp-like language from Gavin. And this was, as the name says, similar to Lisp. This were the three smart contract languages at the time. And then Gavin Wood said, let's make a new one which is most suited for this. And then he asked Christian Reitwiesner to build Solidity. They worked on it's actually, I think it's a nice one. It's readable, it's easy. Of course, the devil is the details.
Yeah.
I don't think it's a bad language. So then later on, people came up with things like using WebAssembly or Ethereum way of WebAssembly. And then you could write them in Rust or some other like known languages with existing compilers, which would then compile to an Ethereum version of WebAssembly, and which then could compile to EVM bytecode. So there are still many ways out there, but I would still think, I don't know the numbers, but I guess still 90 to 95% is Solidity. And I think it's fine. It's not a bad language. If you think about coding for the EVM, there are other blockchains which have other features where the EVM has changed so much. Like look at Definity, or now called Internet Computer, or I
Yeah.
think there's Fool, I think it's called. Like they're building completely new, different kinds of VMs. There you can have a different language for writing those contracts, which makes sense. And I'm not a big fan of using things like Rust or other stuff because you cannot use all of it. Like just importing like all those features Rust has, you cannot really use on chain anyway. So we just use it the same style and maybe just some features of it. So but I think it makes sense to have their own language for just smart contracts.
Right. Yeah. And that makes sense. So you wouldn't think that Rust's kind of memory management features would help create, I don't know, like cheaper transactions and stuff like that.
Maybe I would just say I think the nice thing about Rust, you can at compile time you can check if you have some memory errors or other things. So that's
Right.
really nice about Rust. I actually like Rust a lot, but you would have to make a sub language maybe of it, which uses a lot of it, but not all of it, that it can directly ideally compile to, or maybe over using WebAssembly to EVM bytecode. I just sometimes feel I don't really know what's going on the way there, and I hope it's still what I wanted in the beginning. With Solidity, it feels a bit more direct. Like this was written for the Ethereum virtual machine. And I know pretty directly what I will get in bytecode when I will put this line of Solidity in there. So I think this is not always another way of more abstraction if you go to Rust or other languages. So, but if you make a virtual machine which is directly targeted at having the smart contracts written in Rust and using all those Rust features and so on, then it makes sense. But for Ethereum right now, I would not recommend it.
Yeah, yeah, that makes sense. I did see something developments on Viper, which is a Python-like language to use for EVM, and it was really. I was following along last year, and the interesting thing is that they've kind of gotten to a point where it's big enough that there's some community behind it, and some people are using it, but there's also risks associated with that. There was a hack, a relatively big hack. I don't remember for on what chain it was at the time, but they were using Viper, and the Viper language itself had an exploit in the way it handled some information, so it allowed people to kind of exploit the some of the Viper methods and the way it compiles itself.
Right?
Um,
Things mature over time, and Solidity is really mature. Even though they have not released version 1.0 yet, still it's very mature compared to others.
yeah, that's true. That's correct. And you're also one of the founding members of the DAO, like the DAO, the actual
Yeah.
DAO, which is fantastic. And you wrote most of the smart contract code for that. Is that right?
That's correct. So it's always hard to say who are founding members. I describe myself as the author of the DAO. I mean, I wrote the white paper, I wrote the smart contracts together with others. Like we had about 18 contributors, but only like two to four were really active, and I was doing the initial version of it. We had some team members who then contributed also. Um, yeah, this is a super long story. If you want to make it short, but the DAO was a very exciting experience. One of the most intense, or if not the most intense time of my life, for sure. We had I told you about it, I was leaving Ethereum end of 2015. I would started my own business, and we wanted to do something called Slog It. But the idea was to use Ethereum as a base layer and connect smart devices such as door locks and other locks to it, so people could pay to open a lock, which can then
Oh
be
wow.
used to rent something out. This was the basic idea, like a decentralized Airbnb if you want, or decentralized Uber, whatever. Like the sharing economy was going big at the time. We said, let's have a decentralized version of it by connecting those smart devices to the Ethereum chain. You could pay to use them. This was the initial idea. Then I pitched this in DEF CON 1 in London, first like big Ethereum conference. And at the time I was thinking about, I didn't want to get like VC money. And so I was writing a smart contract where we would make a token sale. And in the beginning, it was like people would give us money, they would get a token and get dividends from a project. So then lawyers said, well, be careful, and dividends sounds like a security. And then I continued to write the smart contract, and I was having the idea of why simply issuing a token is boring. Let's have the money stuck in the contract, and we have to make proposals to get it out. Like we need 1 million for that project, 100K for this, 500K for this, and then they would vote on yes or no, the token holders, if we could get the money. And then the next version of this idea was let everybody put money in, and let everybody make a proposal to get money out. And if the token holders vote for it, so be it. And the overall narrative was we will build something we called the USN, Universal Sharing Network. So this was this decentralized sharing economy network built on Ethereum, and everyone could contribute. We as Lockit, maybe some others as well, some other companies building other kind of locks or doing a marketing campaign or whatever, they would all make proposals to the DAO to do something for it. And every time the product or the protocol would be used, a percentage would go to the DAO token holders. This was the basic idea. So a
Right.
very open, actually decentralized, autonomous organization where everybody could put money in, everybody could ask for money for doing something for the DAO, so it could make money. This was the idea. I pitched it at DEF CON 1. People loved it. We had about 5,000 people on Slack. This was back then. Everybody used Slack for community management,
Right.
like today Discord. And so we had Stefan Chual, who was also a former Ethereum member. He was leading like the communication department of Ethereum, chief communication officer. And he did a very good job in presenting it out to the world and making a nice website, blog posts, meetups, and all of that. And then we had, of course, we actually had a security audit of the contracts. We did everything we could. In the end, the DAO was launched. And when I say was launched, I say I tagged on GitHub the code is version 1.0, that it's released
Right.
now. And then there were, I think, dozens of DAOs deployed by various people. And then the DAO community voted which one they would choose as their DAO. And the name, the DAO, is also a fun side story. We never actually named it the DAO. We just said, we don't have the authority to give this thing a name. The token holders need to vote for it. But the token holders can only exist after they put money into the DAO. So the DAO was just basically a working title, the DAO, until it was given a name. And the idea was that once it's live, they can vote for a name, which never happened.
Wow.
So, and then absolutely unexpected, a lot of money did flow into the DAO. And during the time, the narrative changed again. And it's always so important to see the narrative you know today is very seldom the narrative when something got started. So
Yeah.
the DAO was started with the narrative, let's build a universal share network and everybody can contribute. People put money in who want to be part of this universal sharing network. Then it reached like 5 million, 10 million, 20 million, 30 million, like went crazy. And then the narrative changed towards, well, if you want to put money into apps built on Ethereum, and at the day there was almost no app at all, so or dApp, decentralized application, most likely all the dApps, or decentralized application, would be funded by the DAO. So it became something like a venture fund, which would only invest into decentralized applications built on Ethereum. And this was the new narrative. So everybody who was planning on maybe doing an ICO or something was now saying, well, let's just make a proposal towards the DAO, and let's see if you can get some money from the DAO, because now it's 30 million, 50 million, 100 million, 150 million. Then the ETH price went up. It was, I think, 220 at the top based on the ETH price when you look at it. So
So you
about
basically had people pitching their projects to the DAO to get
exactly.
money.
There was like someone building, I think, was something like an electric bike, and there was all kinds of projects who then thought about let's pitch to the DAO. Um, and this now changed the narrative. Now it was something like a decentralized investment fund, if you want to, but technically it could be a charity. It could be like what we intended, universal share network, could be everything. It's just basically tons of people, about 20,000 Ethereum addresses. We don't know how many people are behind it, putting in 14% of all the ETH, or about 150 to 200 million, depending on the ETH price, and they could fund about everything. So after that, people called for like a stop. Let's say we have to double check everything. What have you done here? And some people were super excited. I was super scared, and we didn't really know what to do. And so lots of details. I think there are some books you can read about it. The best one, I think, is The Cryptopians by Laura Sheen. She describes in detail what happened, and she
I'm
did
making a
very
note of
good
that right
research.
now.
Yeah. So Cryptopians by Laura Sheen. I also, yeah, have this book here in the back if you want to see it, but you can find it. So
Cool.
crypto, and long story short, there was a bug in the contract. So in the bug in the contract, there was a hacker who exploited it. He got about 1/3 of all the ETH into a so-called child DAO. It's like a sub account. They could not take the money out until I think it was 40 days or something like that. And during that 40 days, we had a chance to do something. So it was a very unique situation. Usually, if something like this happens, you can do nothing. Like you mentioned, the Ripple case, if the money is gone, it's gone. Like he can
Yeah.
make a transaction every second or every block if you want to. And so you cannot really freeze anything. You can do the hard fork. There's like no way of doing anything. But in our case, there's literally zero apps on Ethereum, the money frozen in this account for 40 days, you're thinking like we technically could do something. So let's see what can be done. And so we could not change the DAO. There was an idea about a soft fork, just like that the miners would not execute any transaction to the DAO, which was cancelled because there was a DDoS vulnerability. Also, long story short, there was a very contentious discussion in the Ethereum community, rightfully so. I was feeling like hurting my baby by even proposing a hard fork because it was going against everything we stand for, kind of. On the other side, um, Ethereum is governed by its users. Like everybody can run whatever code they want to. So, and offering them the option to have a version where the DAO token holders would get their money back was a viable path. So we basically tried to open up that path, convince the developers to build this version, and then there was an on-chain vote. Only a very few ETH holders participated in it. It was also non-binding. It was more like a signaling of
Right.
what people wanted. And so most of them voted in favor of the hard fork. So it means the Ethereum Foundation put the option in as a default that you are on the new version of it. You could always switch it off. And so, but most went with the default, some actively decided for it. And so we had this hard fork, and now we have Ethereum, Ethereum Classic. Ethereum Classic, the ETH was not returned, and there the ETH hacker still has kind of the ETH from the DAO. And on the main net, what is today the main Ethereum chain, all the token holders got their ETH back. So this
Right.
was very intense, very contentious. I still think it was the right thing to do to give the users the choice to run this client or this client. They made the decision. Both of them are existing today. Real value and market value happened on main Ethereum, which is fine. And yeah, this was the story. It's
Yeah.
the top of the iceberg.
That no, that is intense. Like it always pops up, and it's always super fascinating to talk about that. Did you have any opinion at the time whether the fork happens? Did you have any opinion whether ETC or ETH is kind of like the right choice to go about it?
Well, I was biased. I mean, I was the one writing the code which caused the bug. I didn't want to have people losing their money. And because maybe also very important, in the beginning we thought, well, even those 5,000 people on Slack, if each of them is giving 1,000, that's 5 million. And this is all like our community, the people we meet at our Ethereum conferences. Like us playing around with funny internet money. So it's basically just a game. Of course, it wasn't, but it felt like it's just a little community. But now we heard when it went up to $150 million, I heard stories about like a guy working at a bakery in Paris investing his life money in it. I don't know how much, hopefully not his life savings, but like very normal people heard about it in newspapers, putting money into it, and
Yeah.
I didn't want them to lose their money. Like you can maybe tolerate if someone make 100x on Bitcoin and had to play money and losing 1% of his money because he played around with Bitcoin and
Right.
Ether and put some money in it. But this was now real people with real money, and I didn't want them to lose their money. This was just too harsh. And so I was in favor of the hard fork. I was in favor of giving the money back to people, but I can fully understand everyone who was against it. But in the end, it was about a choice those who run the code, those who run the Ethereum client to be made, like exchanges, users, those who run a node, they can decide which Ethereum they want to support and use. And this was certainly the right thing to do to give this choice. And they did make a clear choice towards what is now called main Ethereum, where the DAO token holders got their ETH back.
Yeah, well, it was a very unique situation because you don't really have that anymore today happening,
Would
right?
not be possible anymore. Absolutely
It
not.
would not be possible.
And it's one thing like is people have so many misunderstandings about this hard fork. The hard fork was not a rollback of the chain. This was not like we reset all the transactions until like before the DAO. This was
Right.
only the ETH related to the DAO was giving back to those accounts. It's like a little piece of state. We call it irregular state change, and not like a global state change. We didn't change all the other accounts. Everything would like the apps would just continue to run. Everything was smooth. The transition was super smooth. This was just a little change in this particular smart contract system, which is not like if this would happen on Bitcoin, you want to make a hard fork on Bitcoin, you'd have to roll back the complete chain, which is insane. So
Yeah.
and so this is why it was possible at all. Also, we had those 40 days where the money was frozen. If you would not have those 40 days, it would not be possible. And today, there's so many applications running on it, so many coins on it, so many stable coins, even coins backed by gold or any all those kinds of things. So if you would make a split today, there is so much damage done. And all of those projects would have to decide on which chain they would redeem the token for the real world asset, be it a real dollar or a gold token or like equity or bond or whatever. There's so much stake behind it. The damage would be immense that I think even if you have like 5 to 10% of all ETH at stake, we would not consider a hard fork anymore today. Back then, this
Yeah.
was not the case. It
There,
felt
wa-
like
th-
it beta. Yeah.
I mean, like you said, there's just so much stuff built on it right now. Not to mention that it's incredibly easy right now for a hacker to get away and cash out that money. Right? You got so much in DeFi built that you could go and you could anonymize your tokens. You could throw them in a mixer. Well, I don't want to say no one's gonna find out because eventually people will find out. And I feel like this is one of the things that centralized exchanges are good at. Like they kind of come together and they always kind of follow the trail and block whenever they see a fraudulent transaction going in the case I was mentioning before with Ripple, it doesn't seem like that has happened so far. It looks like the attacker was able to split the funds and kind of launder them through Binance and OKX, I think. But yeah, going back to that, it wouldn't have been possible today. And I'm also biased about it, right? Because I always thought I was for the hard fork, and I think the Ethereum, the current Ethereum chain is Ethereum. I never really considered Ethereum Classic to be Ethereum in any way, shape, or form. Like it's kind of the difference between Bitcoin and Bitcoin Cash. That's the
Right.
way the same way I look at Ethereum and Ethereum Classic. I look like, well, it's kind of there, but it's only there to like mess things up. It doesn't really help with anything.
And they have actually several hard forks after that for other reasons. So I don't consider ETH Classic as a legitimate chain. For me, it's Ethereum because the chain is more than the technical part. It's also a community. It's a like the users and all of that, and they are clearly on this chain.
Yeah, yeah,
Yeah.
100%. So I just also wanted to move forward with tokenize.it,
Right.
which is like the latest thing that you're working on, and you've actually you've recently developed, and I think it kind of feeds in with the whole idea of decentralized organizations, with moving from different ways and exploring different ways of how organizations can fund themselves. And tokenize.it is obviously about tokenization of assets. Do you want to kind of give like a high level overview of the vision behind it?
Sure. So this actually now links to the DAO a little bit because the DAO was maybe the most extreme form of a decentralized autonomous organization. No legal entity whatsoever, like in terms of directly related to a DAO. When we had the legal entity in Germany, we actually also had one in Switzerland, but this was not yet linked to the DAO. So total freedom. But I also learned over the years, looking at what other DAOs have done, and I admire many of them. There are many good ones, and I like, for example, the ENS DAO doing a great job. But today, I believe, which I didn't believe back then, so I changed my mind on that point, is that the DAO is not suited for building a product or like starting a startup, kind of. Like if you, like we tried to do with the universal share network, or like disrupt them, Airbnb and Uber. I don't think the DAO is the right way of doing it. I think DAOs are very good at, for example, maintaining a protocol such as ENS or even a blockchain protocol, for managing public goods, where you don't have big changes in what it is. It's more about ownership and maybe some governance which is needed, but only minimal governance, because DAO governance is messy. And it's
Yeah.
tons of people. I like this joke. DAO stands for dudes arguing online. sometimes, sometimes that's just what it is. And so it is okay, similar to how a democracy is good in protecting us from the worst case scenarios, but not the most efficient form of government if you want to make good and quick decisions. So there, a dictatorship is much more efficient, but there you have this
Right.
big. It's super dangerous that if you have a bad dictator, and we have a lot of them in this world, they can cause a lot of harm. So that's why democracy is so much better, and it prevents us from this, even with much less efficiency. But we rather have less efficiency than a bad dictator. So, and similar it is with DAOs. So DAOs are like this super democracy, not efficient, but can maintain a certain vision and or certain standards, or maintain a protocol, public goods, and so on. But if you want to build a company and build a product where you have to find product market fit, iterate very quickly, there actually a dictator is a better way of doing it. Of course, this is now, I'm talking about extreme. I hope me as a CEO in a company, I hope my employees don't see me as a dictator, but we still have this strong hierarchy. I still
Yeah.
consider myself as a CEO of Tokenize. I'm making decisions, of course, taking into account all the opinions and inputs from as much employees I can get, or customers, sure. But I can quickly iterate, I can raise funds with specific investors. It's just a better way of building it. Eventually, if you're super
Right.
successful, you have huge market share, it would be a dream of me if then Tokenize it would become a DAO. And then it would be just maintaining something which could be even considered as a public good, which is managing company shares. Or some, in our case, it's participation rights, but it's similar. So this is more like the end state, not where you start with. And so, with this in mind, I still think we should tokenize those company shares. And ideally, there would be something like a global private legal entity type, which doesn't exist because you don't have any global government. So,
Right.
if you look at now each different nation state, you have the LLC in the US and in England, you have the SAL in Switzerland, GmbH in Germany, EU in Estonia. And so they all have their different kinds of entities. And there is no other way than to customize a solution for that particular type of legal entity. And
Right.
so since we are
And those are all limited liability
exactly,
companies. Yeah.
exactly, those are all like the first kind of the limited liability companies as private entities before you, those are not public companies, they're not traded anywhere, and so on. So they're cheap to start. And so in Germany, we have built a solution which just didn't exist before, how to tokenize a GmbH. And the details, I mean, I think your listeners are not, none of them are German, none of them are like mostly Germans, so I don't want to get into German legal issues, but it boils down to the token represents economic ownership in the company. So a token holder has the exactly same economic rights as an actual shareholder. The only thing which
Right.
he doesn't have, what he doesn't have, is voting rights. So in all governance, voting rights, only the actual shareholders, and the token holders get economic participation rights.
Right.
So, and with this, you can do fundraising with private offers for VCs, business angels, and so on. You can do a public offer. Now I'm skipping over this. After what happened after the DAO, mainly those ICOs, crazy sales, raising billions of dollars by selling a token. And unfortunately, many of them have been like fraudulent scams and so on.
Yeah.
But if you have the GmbH, you can technically do something similar, but you have a real project behind it, a legal entity. You are liable, at least in part, for what you're doing. And So you can do a token sale in public according to regulation. So in Germany, we can raise up to 8 million euro with some per year with something called like a little prospect. It's called Wertpapierinformationsblatt. Super nice long German word. So it's basically like a prospect, but smaller and the mini version of it. And it only is about 3 to 4 pages. And with this and someone who has a broker license, you can do a public fundraising. And we are using this token for it because maybe Germany is the best example because their bureaucracy is so bad. If you do any change in your cap table, you have to go to the notary. So if you
Right.
want to have like 1,000 crowd investors, there's no way of going with the going to the notaries, all of them. That's why most of the ways you can invest in a startup as a retail investors, they're giving out some bonds or like just basically a debt loan. And so that's not a real investment in sense like you can participate until the IPO. And so we
Yeah.
have created something where you can have retail investors inside your private company or LLC, in our case GmbH. And this I think is very special. So and also employee participation. So we do those private offers, public offers, employee participation, all using what we call GmbH token. And our goal midterm is to do this for all those private legal entities in Europe. So being it's all LLCs and so on. So right now we're just in Germany. We hope can grow over the next couple of years. And then we will have built something where each company has certain characteristics of a DAO, meaning your company, a normal legal company with limited liability, and you have you're fully integrated in the normal system. So like with tax and
Yeah.
accounting and all the rules and laws, but you still have a tokenized version of your company where you can easily issue tokens. You can public offer, private offer, employees, community members, advisors. You're super flexible. And that's where I want to get. And later on, I hope in the future to also give them voting rights, or maybe they do some informal votings where they do votings. And if the CEO doesn't do what, because he's not legally bound to it, they have also today, they have the opportunity to convert their token into a real share. And with this, they would
Right.
become actually shareholders with normal voting rights. This is more like a worst case scenario because then you stop having a token and you are back to the notary. But it's the only way to get voting rights. But so I'm basically working still on this DAO thing if you want, but just coming from the other side. Basically taking normal legal entities, helping them to tokenize themselves, and moving towards a more DAO-like governance or DAO-like company form in the future. So that's what I'm currently working on. It's super exciting, and we just started last summer with launching the product, the first version of it. Now we are the public fundraising part will start about most likely in March,
Okay.
when when our customers can use this. We have more than 50 companies signed up. Already they have raised over almost 3.3 million now, but 2.3 from tokenizing itself. So the rest is outside
That's
companies.
amazing.
So it's starting quite okay, not yet going viral. So here, advertising, use tokenize it if you're in Germany and having a GmbH. I'm here to help you. So we
Yeah, if
hope
you're planning to run away from the notary, just use tokenize it. Yeah.
exactly it's so much better and cheaper and flexible, and there's so many reasons. Those who understand what a token can do, they immediately get it. How much better it is. Like it's a token on a public Ethereum chain. It's an so-called ERC20 token, which is a common standard for tokens. It's not deep tech, but it's legal tech if you want. But this token can do so much. So that's what we're currently working on, and I hope that one day we become something like maybe AngelList or Carta in the US. So maybe like AngelList or Carta, but a Web3 based version of it, at least for Europe.
And
Yeah,
I think that's what's super fascinating because you've moved from, I think, like the DAO was this idea of how would I build a decentralized organization with no boundaries? Like, just pretend legality just doesn't exist, doesn't come into it, right? This kind of idea, like beautiful, perfect kind of idea. If there was no government to tell you what to do or what you can, what's a security and what's not a security, and
exactly.
then tokenize it is like taking that idea and making it work within the current legal framework, right?
Exactly. 100% put it right. That's what we are currently doing. And also, I like one term. I think Gavin Wood said it first, or maybe the only one who used it. He described Ethereum as not being illegal, not being legal, but being illegal. So, what does the word illegal mean? He described it as a system who cannot care, like the internet. The internet is not neither legal or illegal. It's just a system which cannot care. You can do whatever you want on it. Of course, you are accountable for the one who running a server, hosting a website, uh, doing a trade, offering some e-commerce, whatever. They are responsible for what they are doing, but not the internet. You can do everything you want on the internet, technically. And then
Yeah.
only on top you can judge if this is good or bad. And Ethereum is similar to this. Ethereum just exists. It's a system who cannot care. And some would argue, well, that at the DAO they cared. Well, yes, the community sometimes cares, but now, today, I would say Ethereum as a tech cannot care anymore because there will be no hard fork anymore for the reasons I described before.
Yeah.
So, in similar, I think was the DAO. Is the DAO itself, the smart contract, I mean, was like a system who cannot care. It just existed, and then people can do whatever they want with it. And so we learned that the SEC has a different opinion on those things. So we have to do it a little bit different. And now we're trying to, as you said, work within the legal framework which exists, obeying the law, giving normal users legal certainty, and still having the benefits of having a token which you can issue, and not such a fake token. Like there are many so-called utility tokens, which I think they're so badly designed because of the law. It's ironic because
Yeah.
the law should protect those investors, but because of those laws, those founders said, well, we cannot give them dividends, we cannot give them voting rights, we cannot give them exit participation and so on. So we have to somehow say there is a capped supply and you somehow need a token to use the product, thereby giving the token a value and link it to the value of the product. So if everybody uses it, the value of the token goes up. So artificial links, basically. And the investor did get something worse than he gets with, let's say, a GBH token, where he actually get dividends, where he actually get exit participation, like real economic rights. So, and most of the founders, also back in the ICO bubble times, they wanted to give those token owners actually economic rights. They just feared the SEC, and that's why they didn't. So it's ironic that the SEC caused investors to actually get less rights because they
Yeah.
feared it would be a security. So, and then if you look at the setup, this is now describing a little bit of what happened after the DAO. All those ICOs, at least those who did a little bit of it right, they created a non-profit just because you don't want to have two cap tables, like one for-profit cap table where you don't know, are they the ones profiting if the project is successful, or are the token holders the one profiting if the project is successful? Having two cap tables is a very, very bad idea because as an investor, you never know where the value is. So that's why they choose a non-profit. Um, Even though I think it was ironic, I know some VCs investing in a non-profit getting a donation receipt because it's basically a donation legally and to a Swiss non-profit, and it's insane. And getting this token, where on paper it stands, this is nothing, will be nothing, will be used for nothing, you will get nothing for this token. This is just an entry in our database and not more. So, and you pay 5 million for it. And this 5 million we give you as a donation receipt. You just donated to this nice foundation here. It's an insane model.
It's
So if you think
crazy.
about it, but that's what happened, and billions went into it over 2017 and 18. Then 18, 19, 20 security token popped up, but the first ones were not, like I would say, some of them badly designed by keeping the contracts as they are, just putting a token on top. And by this, there's no real benefit. There's only this: we also now have to have a wallet and have to make a private key secure and transfer the token when you sign the contract. It did make things more complicated, not easier. And you have the old system plus the new system. Like, so you
Yeah.
should not put old wine, a new wine, and old. This is forgot the English word for it.
The decanter.
Yeah, exactly. So it's like those sayings in the New Testament. The Bible says it already. So you need to think it. You need things. You need to think it from scratch again. That's what you tried with tokenize. You have a completely new legal setup, which is
Yeah.
fitted for those tokens, which makes them easily transferable without the need of signing any contract. And that's something which is completely new. It is not needed to sign a contract when you transfer the token, and even though you're transferring a security. Yeah, we did a little legal hack to get there. Yeah,
No, that's fantastic. So, would you then say that Germany is, from a legal standpoint, kind of clear enough so that crypto companies can operate and can use the legal framework effectively? Or do you
absolutely.
expect it to change?
No, I think it's not as I want it to be. Like, if I could change the rules, I would, but I would still say they are clear enough. So for me, at least for what we are doing, man, I cannot judge every edge case. And there's certainly some edge cases that people don't know what to do. But for what we are doing with Tokenize It, I do not have any open questions. Like it's like we treat it as security. We know what are the laws behind how do you can offer or issue securities. They're not as I want them to be, but we know what they are. So meaning we can build a product which just keeps you within those legal requirements. I don't think there is much legal uncertainty as of today, only for some edge cases.
Right. No, that's incredible to know. We've had so we incorporated our company in the Netherlands at the time. I think yeah, in 2021, and we were hoping that Netherlands was going to be at the forefront of like crypto legislation adoption. But then we also came across the same kind of issues that you've literally just mentioned. Everything you want to do for a business from a legal standpoint, you need a notary, and sometimes you need to be physically there. We were lucky because we were allowed to have meetings over video call, so we didn't actually have to go to the Netherlands, but in many cases you would actually have to be physically with a notary doing
It's
all these
insane.
things, signing the it's crazy. We don't have that in the UK. In the UK it's like
Yeah.
you can incorporate a company for £20 in an afternoon if you want.
That's nice.
uh,
And we pay so much money for this. Also, if you do some fundraising, I recently heard someone who paid, I think it was 40K for the notary and 30K for the lawyers for a fundraising round. I mean, I also was participating in a round recently. It was a 7.5 million round, and they paid 30K for for the notary,
wow.
plus lawyer. So it's not only expensive, it's only super inflexible because you cannot do crowd investing or employee participation because you would have to go to the notary for every change in your cap table. So, and you could think of Ethereum as the alternative to the public commercial registry, which in Germany we have the so-called Handelsregister, which is a public commercial register, and only the notary can make any changes there. And
Right.
you could think of Ethereum being the digital version of it. And anybody who has the private key has certain rights to make changes themselves, being it the CEO of the company who can issue tokens, or be it the token owners who can trade those tokens or sell them. So it's a much, much better system. So we hope we move towards that all securities in the future will live on Ethereum or maybe layer two or other chains and have those characteristics which a token has. Now, sometimes we get these questions: why do we have to use a blockchain? And for finally, I have a really good answer to it because if we wouldn't, this would mean the startups, which are our customers, if we that close doors, the database is gone. They don't know who has how many shares, and it's all a mess. So,
Right.
but because they are traded or that they're existing on a public chain, they can use whatever wallet they want. The tokens are ERC20 tokens. They can easily transfer them. The contracts, of course, still exist, the legal contracts, meaning they don't need us at all. We recently even had a case where one of our customers made a change directly on Etherscan. Like he connected his wallet to Etherscan and changed like the owner wallet of his token contract. He could.
Right.
He didn't need us at all. So that the nice thing is you don't need tokenize in the future to maintain your token and your rights and paying out dividends. All of this can happen without us. We are basically only a convenience function at that point. So that's nice. That's you can only do this with a blockchain.
Yeah, and that's fantastic. How do the dividends work? Do you say is almost like staking in a way? You get rewards in your wallet? Is that how you're envisioning it?
So for security reasons, what we did is we have a smart contract where when there are payouts, they pay into a smart contract, and every token holder can get their share. And so
Right.
we take an on-chain snapshot of the who has how many tokens at a certain time, and the issuance will also happen exactly at this time, and then they have time to get their to pull their dividends out. We use pull is better than push for security reasons because if you just airdrop it, you don't know if they still have their keys. You could
Right.
basically give money into nothing because someone lost their keys. If they pull it, they have to make a transaction, thereby proving that they own the keys.
Yeah, that's a good point. So they could do anything. They could just go to Etherscan, connect their wallet, call the function, and get their tokens.
They could do this, or they can use our interface, which is a nice
Right.
app. Or actually, there exists some automated user interface, auto-generated user interfaces for smart contracts. So I saw them recently. Etherscan, you could say, is one of them, but maybe not the
Mhm.
nicest. And there's some which are just making they look at the ABI or like the interface to a smart contract, an auto-generated interface to it. So then connect your wallet and can push those buttons and see the functions which are available. And then you would see something like pay out dividends, and you click it, and then you get some money. So Meaning,
Right.
it is you can use it without tokenize it, but of course with us it's much easier.
Right. Well, it sounds like there's also almost once tokenization solutions are going to become more popular, and I'm sure that they will. It's almost like another gap in the market, having a solution to handle, to automatically interact with functions that, maybe you don't want to, or maybe like a feature in tokenized IT, just having automatic, pooling of these assets,
For example,
via a
yeah,
script or something, because you could easily do a script to do that for you if you wanted to.
sure. It's I sometimes like to call us crypto native companies. Like that's a new kind of companies which are built on those different railroads. Basically, they are built on chain based on smart contracts. They can do all those things, and I hope in 5 or 10 years, maybe even earlier, we have a complete software stack for crypto native companies where you have accounting and all of this done, and they look at things on chain. They get your dividends, do the payouts, and you have a way better back end than today, which is basically just paperwork.
Yeah, exactly. It is going to be, it's going to, I think it's going to be the norm, like having immutable data on on an immutable kind of infrastructure, right? That's what you want.
Right.
And I think it more than enables that, and it should be used more for that kind of stuff. Anything that you would like to announce, any kind of new things that you're building on, any releases for Tokenize It that you want to wait let people know?
Well, the next thing is coming up with our main feature, which is crowd investing. That you can have a, if you want, you could even call it ICO if you want. I don't like the name ICO, but
Yeah.
that basically people invest in your company in a legally sound way. We hope to release this by at least in this quarter. Let's say let's stick with this quarter. I don't want to give you a specific week, but that's I think the biggest one coming out. And then by the end of the year, we hope to get to build a secondary market for those tokens. There are lots of things to do before that, so maybe it will be 2025. Let's see. But this is our current roadmap, and we are heads down building.
Sounds incredible. I wish you best of luck with that. I think it's a solution that a lot of companies need that maybe they don't realize they need it right now. And do you have any socials that people can follow along and can learn more about it?
Yeah, so sure. Tokenize it HQ on Twitter. But if you just Google tokenize, you will find us on LinkedIn, Twitter. Not yet Farcaster. I think that's what we're starting next. Going to
Okay.
Farcast. Let's see. My personal Twitter is what I'm using the most. Is CHR Jentzsch. Um, you try to find it maybe on Google or on Twitter. CHR Jentzsch is GENTZSCH, a complicated German name. Not many vocals. But yeah, I'm mostly using Twitter if I use any social media. Maybe, hopefully, will change in the future to Farcaster or Lens and all those other nice protocols. I hope they get traction.
Awesome. Well, thanks a lot for the conversation, Christoph. It's been genuinely super interesting, and it's been a pleasure to talk to you.
Likewise, thank you.
Thank you. Thanks, everybody. Bye.